Hello, my name is Jeff Agee, Chairman and CEO of First Citizens National Bank, and today I get to present our second quarter shareholder report. The very first slide I'm showing you reflects that in the Bank Director magazine, our bank was ranked number 45, not in Tennessee, but the United States. The Bank Director magazine segmented these banks by capital, asset quality, and earnings. It was a balanced scorecard type approach, and again, our bank ranked number 45 in the U.S. Probably the biggest strategic item on most companies across the United States right now is employee turnover, and all feeding into attracting and retaining the team. Here at our bank is no different. That is the number one strategic priority with us. For sure, trying to retain our teammates and then trying to attract new teammates into the company is more challenging than I have ever seen it in my 40-year banking career. So it's a hot topic right now. COVID is expanding again. We have not strategically executed any new, action plans yet. We are anticipating this fall to get a little more amped up and at a level that we probably will have to execute a few actions to protect our teammates and our customers and the community in itself. So we will keep you up to date with that. One thing you'll notice as we go through the brief presentation with some of the slides, we have record earnings again in the second quarter. And some of the core big ticket items that are driving these record earnings, cost of funds, we have driven those down to a respectable level. Bad debt expense applicable to loans is zero through the first 6 months. Now let me say that again, because I have never dealt with that in our bank. Zero expense in bad debt expense for the first 6 months applicable to loans. Our mortgage division, trust, insurance division, brokerage, and triple P fee income are the big drivers from the non-interest income area. These are very vital to our bank long term, and they have really stepped up over the last year and a half especially. Great barometer to look at, return on equity. You can see in 2021 that our return on equity is 11.5%. Last year at this time, it was 9.9%. Good jump there. We're very humbly proud of that ratio. Dividends per share, which is very important to our shareholders. You can see in 2021, the cumulative dividends are 70 cents, and the prior 2 years cumulative through June was 60 cents. Total assets. We are not far from approaching the $2.2 billion in assets. We're at $2,122 million through June 30th. Last year at this time, we were at $1.9 billion. And you can see going back to the year 2000, and that's quite a few years, but it's pretty impressive when you go back over a 20-21 year period. And you can see we've gone from $700 million basically to a $2 billion bank. Something that's really standing out in the banking industry, but even with our bank, we're doing better than our peer groups, as this graph will reflect. Asset quality is critical in the banking arena. It can make or break you. And you can see this is our non-performing performance ratio. It's the past dues 90 days and plus, and the non-accrual loans. This 0.3% is First Citizens, and the graph or the bar over to the right is the peers, which is basically right at 0.6. We're basically half of peer there. Now, the lower you are, the better with asset quality ratios like this. So this is a very good indicator for our bank. Going into the COVID scenario, we really thought this could be horrible, but it's actually due to the infusion from the government and our customers in themselves have done a great job So our asset quality ratios have been very positive. This slide I'm going to show you here is the earnings per share for the first 6 months of 2021 compared to the past 3 years. You can see the current year is $3.30. Last year, $2.65. And then the previous year, 2019, $2.16. A very positive trend in earnings per share, which actually feeds in to our stock value. So it's a great barometer, and we're very proud of this slide also. The forecasted earnings per share is $5.95 for this year versus $5.56 and $4.72 for 2019. As you can see, we have great numbers. We're very, I guess, humbly confident with where we are now. We really feel good about 2021, the remainder of the year, and anticipate this year to be a record year. Thank you.